Welcome everybody to the second webinar, and we'll be dealing with the trading platform today, this evening. So first of all, welcome. My name is Sean. I'm the director of the department here at Avatrade, and I also want to welcome you on behalf of Daytrader.dk and the trading experiment. Now, before we actually begin, I just want to make sure that everybody can hear me. So if you can please type OK in the question box so I know you can hear me, and we may begin. Hello, and welcome to this evening's webinar. My name is Sean, and I'm the manager of the ROW department here at AVA, and also a trading expert. And I want to welcome you also on behalf of Daytrader.dk and also the trading experiment. Before we can start the webinar, I just want to make sure that everybody can hear me. So if you could please type in OK in the questions box, then I know you can hear me and we may begin the webinar. Okay, great. So last time we discussed basic trading principles and what trading actually means. So today we're going to handle just the actual trading on the platform and how to log in as well. All right. So first of all, let me show you how to actually log into the platform. All right. You should all have the Avatrader button on your desktop. And when you double click on it, you should get your login, a pop-up that shows you the login. Here you put in your username, which is your account number as well. You put in your password. And now the following is very important. It depends on whether you register for a demo or a real account, but you have to select your demo and then your currency type. So real USD, demo USD, or real euro or demo euro. Okay. Once you select that, you can select the language you want the platform to be in. Okay. And then you click on login. Now, I'm actually already logged into the platform. So this is the trading platform. Now, I mentioned already last time as well how to open a position and how to select and choose the instruments you want to actually see in the platform as well. But I'll briefly go over this as well as a reminder, and also for some of the people who weren't there last webinar. Now, in the Forex, on the Forex tab right here, you see all kind of different instruments. All of these you can obviously trade as well. In the CFD tab, you have other instruments and also a dealing rates table here and some charts on the right-hand side. Now, what's important to understand is you can customize the whole platform as you want. So if you want to move the charts around, you want them here and you want this here, that's not a problem whatsoever. Okay, you can actually play around with it as you please. So that it gives you a lot of freedom to act as well. Okay, if you want it nicely done, okay, so you can do whatever you want. So it gives you a lot of freedom to play around. You can put in more charts here as well. You can select type of charts. You have the candlestick charts, which is the most popular one. You got the bar chart and a line chart. Now on the chart itself, you have also the instrument you're trading and also the time frame. And you can change it obviously by clicking this as well. And let's just move back to the candlestick chart. Okay. Now you can zoom in and out by using the plus and minus button on your keyboard, or also by these buttons right here. Now it is possible to trade directly from the chart. Okay. You can simply right click on the chart and then you'll say buy or sell the instrument of the chart, in this case euro dollar. So if we're saying buy euro dollar, it will give up the pop-up screen of the confirmation of the order. We click on OK, and we have here the order that has been opened already. So this is the position we just opened. Okay. Now you might want to actually see what is going on the chart itself. So you can enlarge a chart. Now one very nice feature is that you can actually see where your open position is. So you can click on this button here, right next to where we change the type of the chart, and click on show open position. So what you can see here is that the open position is opened right here, and it shows also the amount, how much we bought. So as you remember from last webinar, 10,000 is we just bought 10,000 euros and we're selling $10,000. That is this position. Now this is where we actually are. Now one thing I want to specify, we touched upon it briefly last time as well, and that is a stop loss and also the support and resistance lines. Now for those that were there last time, I started by explaining support and resistance line and also how to draw them on the chart. So then I mentioned I drew this line. Okay, I think it was on the 1 hour chart, if I remember correctly. So yeah, we saw that this line was representing some kind of support line. So we also entered a position there and we put in a stop loss. Now, the markets were lucky because it gave us a perfect example of how important a stop loss actually is. Now we can go here and show the closed positions. So we can now actually see when we opened the position and when it got closed. We can see it here very clearly on the chart. So we opened a position and sell position here, and we put in a stop loss right here. Now, the stop loss prevented, this trade was a losing trade, but it prevented us from getting a much larger loss because the price right now is all the way up here. So if we didn't have a stop loss, we would have encountered a much larger loss. So this is a great example of how a stop loss is preventing you from getting a larger loss on a certain position. Now, if you would be at the computer right now when this happened, you could have closed it manually. But what if you just took out your dog, you went for dinner or anything like that, you weren't at your computer, and you wake up here, then you would have a much larger loss. So the stop loss is very, very useful for you to use. Now, obviously, you don't have to see only the close position on the chart. Right here, you have also where you can see your current open position. Okay, there's summary, account information, and then close positions. So when you click on close positions, you see the instrument you have, euro dollar. You see the amount. You see if it was a buy or a sell, and you see the other information as well. And you can see that our net profit or loss, in this case a loss, is around $5. Okay, we lost 5 pips on this trade. Okay, now in the end, you can also see here that the reason it was closed was because of the stop loss. The S represents a stop loss. All right, now what if I don't want to trade the euro dollar? I want to trade something else. So it's very easy. You can just click here and select what it is you want to trade. And you can obviously, like you can see here, you can have different charts already preset. And you can change the time frame for each of them. Now, if you want to add more, that's also another problem. Open chart, you right click on the instrument, you click on open chart, you select again what you want to see. Let's say 1 day, you click on OK. Now it's like here. Now we don't want it like this because it's in the middle of nowhere. So we can right click right there and release it, and then it adds an extra tab right here. So that's very, very user friendly. All right, now what if there's, as you can see, there are a lot of different instruments right here in this table. So we don't want to see all of them. We only want to see a few instruments we're actually interested in trading. So we can right click, we can go to preferences, then settings, and here you can see which ones you want to see and which ones are invisible. So as you can see, all these instruments are invisible. You can trade them, but they won't show up in this dealing rates table. So let's say we only want to trade the 3 most popular currency pairs. Okay, we make the rest invisible, and let's just look for them again. 1 second. Okay, so when we press OK, you see that there are only a few left. Okay, so now we can see that there are only 3 instruments here in this dealing rates table. So we have a nice and clean view of what we want to trade. Now again, if you want to add more, you can obviously do that. You right click again, go to preferences, settings, and you select whatever it is you want to see. You make it visible, and you click on OK. You can also change the order of what you want to see. If you want to see the S&P on the bottom, that's not a problem. And you click OK, and you can see here that S&P now is on the bottom as well. Now, as I said earlier, you can open a position on the chart by right-clicking it and then clicking buy or sell. Or you can also use the dealing rates table, left-click on sell or on buy, and you can see here that you'll be selling an amount and you can click on OK again, or you can change the amount as well and click OK or cancel, obviously, if you want to change your mind. Now, what is important is when we click on the open position again, we can see what's going on. We're making a small loss at the moment, not too bad. But what we do want to keep in mind as well, which is very important, is our margin and used margin. Now, on the bottom of the platform, you'll see here used margin, which is 56.63. Okay, that's the amount of money that's put in reserve in order to open the trade we have right now to buy 10,000 euros. And you can see here the margin level or equity level. Now 0% is fine, not a problem. The issue is that when it gets to 90% or even over 50%, that's when you're using too much margin. That means that your account is in danger because you're over leveraged. Okay, you have too much loss on your open positions. Okay, so that's important to keep a close eye on that as well. When that happens, you want to either put in more money into your account or you want to start closing some positions in order to have enough margin. So that's something that is very important. Now you can easily see this if we're going to open a sell position, make it a little bit larger. Okay. All right, now we can see that this has changed already to 7% because we're using now over almost $7,300 in margin. Now the level is the equity divided by used margin. So our equity is 99.5. Used margin is 7,300. So that is 7%. Now, as you can see, because of this larger position, the profit and loss is much larger as well. And each time it changes, the profit and or the loss will be much larger as a result of that. Because here we only bought 10,000 euros, but here we're actually selling 1 million pounds. Now, obviously, you can trade whatever you want. Okay, you can trade Forex, you can trade stocks, you can trade indices, you can trade commodities, whatever you want, you can trade. Here's already a chart of crude oil. So we see that crude oil just topped the $40 today, actually, for the first time in a long, long time. And since then, it moved down a little bit. But you can do everything you want. You can trade gold as well, which also has been moving up yesterday and today because of the FOMC statement of yesterday. So there's a lot of freedom of action to trade whatever you want. So again, open chart. We click on the time frame we want. Now we'll go in the middle again. So what we do is right click on the gray area here, move it a little bit. You'll see this box on the other chart. That means you can release it, and then it will go and add the extra tab right there at the top. So we can tab around here between all the different instruments we have. Now, as we see that this trade already, the second one is now has turned into a profit already very quickly. Now, we want to protect this trade again because we want to be sure that we're not going to be wiped out. All right, so we're going to enter a stop loss. Again, a stop loss is in order to protect our accounts. Okay, and we're going to put in an amount we're willing to lose on this trade. Again, you can put in either an amount, a monetary amount that you're willing to lose. You can put in a distance in points of the current price, or you can put in an actual price as well. So let's say I want to put in 1.5. No, that's too high. What's the current price? 1.45. So let's say we're willing to lose around 2,200. All right, so now we see that we have a stop loss here, at 1.45. When the price reaches that level, the position gets closed down automatically. We don't have to stay at our computer or check what the markets do. That doesn't matter. We know when it goes against us to a certain price, we get closed down. Now, we don't only want to protect our trade, we also want to make sure that when we hit a certain profit, what we expect, the trade also gets closed down automatically. So that's what we have the limit order for. You can click here, and then it will give us the same box just for the limit order. And again, you can put an actual rate, a distance, or a monetary value. So let's say we want to make $5,000. Oops, $5,000 on this trade. We click on OK, and we see also that the limit order is entered here as well. Now, on the bottom, you have your orders. And here you can see that there's a stop and a limit order. And you can actually see also the distance at the moment of hitting this. So as the price changes of the instrument, you see that the proximity also changes. Now let's enlarge this chart for a little bit. And you can see again, we want to see again our open position is right here. Okay, we see the green bar here. And let's also show us our orders. Now you can see that we basically we protected this trade on the bottom and on the top. Okay, so if it reaches out without this band, whatever hits first, it's get closed down, either at a profit right here because it's a sell position, or at a loss at the top here. But again, it's a sell position, so if the price moves up, it's a loss for us. We want the price to go further down. Now, there's also the beauty of trading. It doesn't matter what the market does, whether it goes up or down. You can always profit in the markets. It just depends if you're on a buy or on a sell position. So when the chart goes up, you want to be in a buy position, because if it goes further up, you're making money. Now, when the market goes down, or the chart goes down, you want to be in a sell position. The further down the chart moves, then the more money you're making, the more profit you will be making. So it doesn't matter if we're talking about the market crash, you want to sell because that's when you're making money. When the markets are booming and everything goes up, you want to have a buy position. So the market always gives you opportunity to trade and to make money. A lot of people are scared to trade when the economy is going bad and the markets are going down because they only think they can make money when the market goes up. That is not the case. You can make a lot of money when the market goes down by taking advantage of market crashes or stock crashes or currency crashes, whatever that may be. So again, you can see here the trade is protected on both sides, stop and a limit. So now we can go home or we can go out and do whatever we want to do without worrying. We know that in the worst case, we're going to lose around $2,200. And in the best case, if happens what we think will happen, we'll have making a profit of $5,000. Now, obviously, having put in the stop and the limits does not prevent you from closing the position at any given time. If you want to close the position, you can do so at any time you want by clicking here on the close and confirming it again. Now, you can also partially close a position, put in part of it, and click OK. Now we're still in the trade, but half of the trade. So instead of 1 million, we have the position now of 500,000 only. So we basically reduced our exposure by half. Now you can see again to your closed positions that we had a loss of $205 on this because we just closed it right now. But again, we limited our exposure. And as a result of this, also our equity level or margin level went down from 7% to 4%. And obviously our used margin is also lower. Okay, so all these things affect each other. Now, right next to it, to the margin level, you see your net P&L, your net profit and loss. At the moment, it's still in the minus of around $100. It's obviously changing all the time as the market changes as well. Okay, are there any questions so far regarding opening a position, putting in a stop and a limit order? Okay, great. So as you can see, we have more tabs here on the top as well. All right, such as the CFD tab. Right here you see dealing rate stable, and again you can buy and sell also from here. And again you can change the amount as well. Now one thing that's very important is here you can see also the spread, okay, of the instrument at any given time. Now what's also important is you need to know what size position you're opening, because there's always a margin requirement as well. So for gold, for instance, there's a margin requirement of 1% that you can check on the website as well. Okay, but what does it actually mean? Now, if we're going to look for gold, there was a chart here, if I remember correctly. Yes, gold. So it means that at the moment, the price is 1263. Okay, so a margin level of 1%. Okay, it's very simple. You just take 1% of 1263. Okay, that's the margin requirement, because also the amount that is required, the minimum trade size, is 1. So this means that actually to trade 1 ounce of gold, we need a margin of, at the moment, around $12.63. That's what it takes. That's what you need in your account in order to trade gold. So with 1263, you have 100 times the buying power. The leverage is 100 to 1 on gold. Now, as you can see already in the meanwhile, our sell position here has turned into a profit. And you can see that also reflected again here down below. And again, you see that the proximity also changes all the time as the price moves. Now again, the amount you're buying or selling is your buying power. You cannot lose more than you put into your account. So if you fund your account with, let's say, 5,000 euros, the worst case scenario is you lose 5,000 euros. You're not going to lose 25,000 euros if you only funded your account with 5,000 euros. Right? We're not going to knock on your door and say, hello, mister, you need to pay us 20,000 more because you're in a debt. You will not be in a debt to us. Okay, so whatever you put in your account, that is the maximum you can lose. But again, you obviously have a stop loss in order to make sure that you're not going to lose everything on one single bad trade, because that's not what we want. You want to be able to trade long term and make lots of trades. Okay, so it's important to when you open a position, you should have a goal for that position. You should know what is your goal. You think is going up or down, buy or sell, and where you put your stop loss and where you take profit. You should always trade with a goal in mind and know what profit you want to make. Now, as I said also last time, it obviously is not a good risk and reward if you're willing to lose $20 and make $10 on it. That does not make any sense, because you're not willing to lose more than you're going to gain in the best case. So a normal win to loss ratio should be at least 2 to 1, meaning I'm willing to make $20. In order to make $20, I'm willing to lose $10. That should be more or less a proper ratio. Can also be larger, obviously, $30 and $10. But if you're willing to risk $10 in order to make $10, it's not a smart move. You can do it if you want. I mean, you have the freedom of power to do what you want, obviously, but it's not recommended. Now, some don't want to get all the time a confirmation of what they do. They're pretty sure of what they're doing, that's what they want to do. So instead of getting all the time this confirmation window, you can also enable one-click trading. how to do that, you can go to the settings page right here. And here on the top, you have one-click trading. When you enable that, you can see here on the dealing rates table already, the amount, you can set the amount you want to buy. And you can click buy or sell. Let's do sell. And it's already executed. Remember, this was on the DAX. So we go back to our open positions. And we see here, indeed, we have a sell position on the DAX. So that's if you want to do one-click trading. All right, again, you can change around the charts, as I said earlier as well. Okay, so if you want, for instance, you want to have the dealing rates table, and at this right here, you can close it here. You can go here, close this here, go to view. Go to Windows, click on dealing rates, and click on the dealing rates here, and you can have them right here. Again, you can place them obviously anywhere you want. Okay, but let's go back to the original setting. All right, so that's basically how you can do one-click trading. Now, what is also very important, as I mentioned earlier, is the amount of your trading size. Now, you can already put in that it opens by default at a certain limit. Now, at the moment when we try, it is 10,000, as we can see here, but the minimum trade size, minimum trade position is 1,000. So instead of changing this all the time to 1,000 manually, we can already set that as a default. How do we do that? Right here, when we can see our open positions and our closed positions, we can go to account information. And then we see here DA, that says default amount. When we click here, we see that it's 10. This means currently it's by default opening 10 times the minimum position that is required. So if we click here on the 10, one second. Okay, one moment. All right, so basically that's how you can do this, okay? Now, I also want to move a little bit to the web trader, okay? For those of you that use a Mac or online, okay, that's also possible. Now, you can use the web trader to go to the Avatrade website, then go to trading platforms and go to web trading. Then scroll all the way down. For those of you with an Avatrader account, that's the platform we're currently using, is this one you need to use. And those using a MetaTrader, you can use here the Launch MetaTrader web. Okay, for those using the MT4, the MetaTrader 4. So here you put in again real or demo, and you put in the currency type, and you click on trade. Now I was already logged in, so you can see here also that it looks more or less the same, and you can also see that the trades are exactly the same as well. So whatever we did on the regular platform, we can see that down here also right here on the web trader. We can see here exactly the same trades. Right here on our account information, we can see here that also we're having a profit of a little bit over $6, $96. And that's also what we see here on the real platform and on the web trader. So you can be logged in at the same time on both platforms, and they're obviously interchangeable as well. So whatever you do on one, is also reflected automatically on the other one. Now, as you can see, that it looks very, very similar. You have the same features as well. Okay, here you can also see your orders. Now, one thing I did not mention yet. One second. Let me finish what I was speaking about earlier. So you can click on default amounts. Okay, also in the web trader, and you can change it. So this means 10 times the minimum trade size. Now, let's say we want to be very conservative and we're just getting started. So we want to obviously trade the minimum trade size every time in order to not risk too much. So we can put in 1 and click on OK. Now you can immediately see already that if we're going to open a position, let's say on the GBP USD, that it says 1,000 now instead of the previous 10,000. Now you can obviously also put in a preset stop or a preset limit. So you don't have to wait for the position to be opened in order to put a stop or a limit order. So you can already do that right now before the position gets opened. Okay, so that's not a problem whatsoever. Okay, again, we put in here a new order with a stop loss right there. So we're all protected here again. Now you cannot put in a standard that you have a stop loss that is half the limit. That's not possible. You have to actually do that manually each and every trade, because also not on each trade you want to have the same risk and reward ratio. Some trades you're going to be more aggressive, so you might want to have that ratio changed, and some trades you're more conservative, so you also, again, you want to have a different ratio. So this is not possible to put that in by default. Now, as I said, the whole platform, you can change it around. So you can put in chart settings, right click on the chart settings, and you can change the colors. You can change the background color. Let's make it nice and bright. You can make it yellow. You can make it whatever you want. So that's a personal preference, obviously. If you want a white background, black background, purple, green, doesn't matter. Whatever you want. Now also the color of the candles you can also change. Now one thing that's also very important that I haven't touched upon yet, I did it very, very briefly last time, is indicators. Now let me first show you again how you can draw lines on the chart. One second. Let us first do the indicators. Okay. You can click on the FX button right here. FX here. It's again It's the same thing on the platform. It's right here, FX. It's exactly the same thing. So we can click on it. Then we have all the available indicators. We have them right here, and you can click on them, and we can put them on the chart, and we can see that immediately it's also reflected on the chart as well. Are there any questions? Okay, great. So that's basically how you can also add indicators to the chart. Okay, obviously Bollinger Bands are popular. You got RSI. I got moving averages. Whatever you want, you can add there as well. So that's not a problem whatsoever. Okay, again, you can make it larger a little bit, so you can play around with that as well. Again, you can see here the orders. Again, also here you can play around with it. If you want to see it in one go, you can put that here, and you can press this here. Just with the left mouse click, you can just order it and select it where you want it. Okay, so now we have everything right here very nicely. We see our open positions. We see our closed positions right here. So as you can see, we're not doing all too well. You have your summary of what the totals are of your account. You got your orders, which are the stop and the limit we put in. And again, your account information, which again gives you all the information of your account at the moment. Okay, so again, we have the default amount set as the minimum one, as 1. And you can see your equity level, your usable margin, your used margin, your equity, and your balance. Now your balance is your equity plus minus, one second, your balance is your equity plus minus your open positions. Okay, your equity is actually what's reflected if you close all your open positions. So a lot of people, they look at the balance instead of the equity, which is actually wrong, because you can have a balance of $100,000 but an equity of only $100. Now the $100 is the actual amount which is in your account when you close all your positions. So it's obviously preferable to have a higher equity than a higher balance, because as you close your position, your balance will be updated as well. So if you start up with 100,000 in balance and your first trade is a profit of $100, okay, the balance until you close your position will remain unchanged at $100,000. But your equity will already reflect your profit, so that will reflect $100,100. Now, only when you close your open position will your balance be updated as well, and then your equity and your balance will be the same again. So only when you have no open positions, your balance and equity will be the same, or when your net profit or loss will be 0. At that point also, your balance and your equity will be the same as well. In all other circumstances, if you're having a profit or a loss on an open trade, your balance will never be the same as your equity. So what you want to look at is your equity, because that is what's really reflecting the real money in your account at that given time. All right. Now, are there any? I think we've dealt with most of the features of the platform. We know how to add instruments, how to find the instruments. We can know how to sort them as well. We know how to open positions. We know how to close positions. We know how to put in a stop loss, a limit order. We know how to protect ourselves with a stop loss. And we also know how to put in the default amount so that we don't have to manually change all the time the position size. And we also know how to work the charts, how to change them, the type, how to zoom in, how to zoom out. Okay, how to add indicators, how to change colors, and also how to show your open positions and your open orders and price alerts. That's one thing I forgot to mention. You can also put in price alerts. So when you want to be alerted that the price is when a certain price is hit, you can put here put price alerts. You can put here a different price. Press an OK. Now, whenever that price is hit, you'll get a pop-up in the platform as well that the price has been hit. So that's also a very useful feature. If you don't want to put in an entry order, which is in a future order to open a price at a certain price. Okay, I didn't touch upon that, so let me do that very quickly. So you can also, instead of opening buy or sell at market price, we can also do an entry order, which is a future order to buy or a future order to sell. So when we expect the price to go further up when it hits a certain price, we can put that. Again, it's put in a future price, so not current price. So if you expect, let's say if oil is trading at $40, so let's say we think when it hits 41, it will go further down. So we can put in an entry sell order, meaning that when the price hits 41, we open a sell order because we think the price will go further down right there. Now, in order to find the minimum trade size for the individual product, okay, you can find it on the website. Under trading conditions and charges, you can select here what it is you're looking for, commodities, FX, stocks, but you can see here minimum nominal trade size is 1,000. Okay, now as I mentioned also the last time, how to know how much it actually is or how does that reflect? The margin requirements for the Avatrade is 0.5%, meaning we're having a leverage of 200 to 1. Now that means that when we divide 1,000 by 200, we get to 5, meaning that the required margin for that trade, let's say the euro dollar, it will be 5 euros. So 5 euro margin is used for a 1,000 euro position. So if you want to open a 10,000 euro position, okay, what you need to do is you do your amount, your trade size, which is 10,000, and you divide that by the leverage, which is 200, and then you get to 50 euro. That's the margin you need in your account. Or alternatively, you can obviously do 10,000 and then times 0.5%. Okay, that gets you the same amount. So either divide by leverage or multiply by required margin. So for commodities, for instance, as I said, for gold, the minimum trade size is 1. Margin is 0.5%. Okay. So you divide. So here is also the leverage is 200 to 1. So just take the price of gold, divide by 200 or multiply by 0.5%. And again, you get the required margin for 1 ounce of gold. If you want to trade 5 ounces, just multiply the amount you get from 1 by 5, and that's the easy way. So let's say gold is trading at 1200. Okay, let's divide by 2. Let's multiply that by 0.5%. So we get to $6. And if we want to have 5 ounces, we just multiply that by 5. So we get to $30 is what is required, okay, to trade 5 ounces of gold, which actually has a value of $6,000. So that's how the leverage works and how the leverage comes into play as well. Now again, you can also see this, obviously. Let's take this away again. Here it is also reflected though. You always see here what the minimum trade size is. So 1,000, that's what the minimum trade size is. So if we're looking for the S&P, for instance, we can see that the minimum trade size is 1. Okay, it's always reflected also in the amount because we set the amount already as minimum. And also on the slide bar, you can also see what the minimum is there as well. All right, so that should be more or less it. Are there any further questions before we're going to wind up this webinar? If so, please ask them now. Okay, so trailing stops. They work the same. I touched upon them a long time last time as well. They're available on the trading platform. Okay. They're not available on the web trader. Okay, but they are available on the downloadable platform, the trailing stop. Okay, now this webinar is being recorded. Okay, so you will be able to review this afterwards. You should receive an email with the recording by tomorrow. If not, please let us know. Also, if you have any questions, obviously, feel free to, that might come up later on while you're trading yourself or when you're reviewing everything. You can always contact us at customer@avatrade.com. All right, or your personal account manager as well. Now, if you do not have a personal account manager yet, he or she should be calling you pretty soon. And if not, you can also send an email to customer@avatrade.com and you will be assigned an account manager there. All right, so I hope you all enjoyed the webinar. I hope it was useful for you and suitable. Thank you very much for attending and good luck with the trading. And who knows, maybe we'll meet each other again on a different webinar on a different subject. Have a nice evening and good trading.